Hey, what's up guys? This is Martin from MI5. Today's video is going to be about SoFi. It's actually going to be a two-part video. After the SoFi video, just stick on here if you want to see. I'm going to talk about how to make money in this market that's not doing very well right now, and what you guys could do and should do to continue to make money even with a declining market. So with that said, stick to the very end, and hopefully you guys will be pleasantly surprised. So let's get straight into this video today. Now, my last video the video was about how SoFi was going to touch the $7 range, how it was going to go down to $7, and it actually did. I think it was Monday, and it went down to a low of $7.75, which is pretty low for SoFi. It's probably one of the lowest it's had in a 52-week period. And this is today, which is Wednesday, March 16th. And it had a little bit of a recovery. You can see here at about 9:45 in the morning on this chart, it hit about $8.15, and at 10:33 a.m. it went up to $8.71. And I would say a high for the day was probably about $8.76, which is pretty good compared to where it was. So if you guys had bought at $7.75, $7.80, even $8, and if you had sold at $8.76, you would have made a little bit of a profit, depending on how many shares you guys had bought, and made a quick day trade or even a swing trade. So then for today, hit a low of about $8.12, then recovered back up to where you can see it green here at $8.57. Now, the title of this video is called SoFi stock is the most shorted stock in the market. And if you guys don't believe me, let me show you the article here. Now, let me read it for you so you guys don't have to read. I'll just read to you. Lucid Group, LCID. Now, you're probably like, why is he talking about Lucid? Just hold on a second. Tops list of crowded shorts. Tops. Okay. Now, Lucid Group, LCID, was the second most shorted stock behind SoFi Technologies. That means SoFi is the number one. Over the last 2 weeks, with 11.7 million new shares shorted, as three partners noted. For the year, LCID numbers of shares shorted has increased by 20.4 million shares, worth $469 million. But like I said, I don't want to go on reading about Lucid, but SoFi is the number one shorted stock. And why is that? Well, one reason is because of its float. Second reason that I can think of is because of the amount of retail investors that are invested in the particular stock as of SoFi. So why is SoFi stock being so heavily shorted and its number one shorted stock? Well, that's pretty simple. It's because these big hedge fund managers can see that SoFi is consisting mostly of retail investors. Therefore, the stock is very easily manipulated by them. So they can manipulate it very easily. So what they'll do is they'll dump a bunch of stocks, and they hope that they'll scare all of you guys into thinking, oh, you know, SoFi is not really worth investing in. Maybe I shouldn't have bought it. Maybe it's not a company with good fundamentals. You know, penny stock like things like that. You guys will sell off, get scared, and they'll come in and buy up all your shares. So if you guys are deeply invested into SoFi, and you have a high dollar cost average, your average cost, I suggest you hold on to them as long as you can. Don't give up and sell them at a big loss. So do I still believe in SoFi? Yes, I do. Do I still think SoFi is a great company with good fundamentals and that it will grow? Yes, I do. Do I think it's going to reach $30 or $40 by the end of 2022 as far as the stock price? No, I absolutely do not believe that. It's not going to happen. People who think it's going to go to $40, $50, $60 by the end of this year are smoking some serious hopium. Now, I'm here to give you guys my honest, true opinion and lead you guys in the right direction. So I'm never going to sugarcoat stuff for you. I'm not going to provide you with a hopium, because I want you guys to make calculated, educated decisions. And I want you guys to plan properly so that you do not get caught bag holding, because I have an average cost of like $14.76, I think it is, because of a bad swing trade. But no big deal. I'm just going to hold on to it and see what it gets to by the end of the year. Now, if we get to $20 by the end of the year, that would be absolutely amazing. And I even think that might be a far stretch. So let's see what we can do as far as SoFi. You guys keep holding on. If you are holding, don't sell at a loss. If you can afford to not have that money in your pockets or whatever, leave it there. It will go up depending upon what you guys' average cost is. Mine's not the worst. I've seen people average costs in the $20 to $22 range, and they're seriously hurting right now. And it's going to be I'm not going to lie to you, it's going to be a long time before you can even break even on that again, because this stock here is going to continue to be pushed down for quite some time with market manipulation and so forth. There's going to these interest rate hikes, inflation. There's just so many things. People blaming the COVID thing still. There's so many different things that are going to hold the stock back, and it's going to be quite some time before we can see it really starting to push back up again. It's not just SoFi. This is the whole market, people. So nothing against SoFi whatsoever. Matter of fact, I'm going to do some more videos shortly on some other stocks that I think that are, obviously in the same position, in the same boat. So let's go back 5 days on this chart, just in case you guys didn't watch my last video. And just on the 10th of March, SoFi was at 963, 978. Then you can just see it had a real huge sell-off. Went down to 809. And then we went down to the 775 I was talking about, which people said, no way, Martin, it will not go down that low. It's SoFi. It's a company with great fundamentals, room for plenty of growth, so on and so forth. Yeah, it does. But SoFi, you just saw, I showed you, is the #1 shorted stock in the market because of these big hedge fund guys and all this stuff. And they're going to manipulate this price. Obviously, this is not SoFi's true value. It's just stock market manipulation. It has a lot to do with the economy, the war with Russia and Ukraine. There's a lot of factors involved here. And I'm going to wrap up this video and stay tuned for the next part, which is, you just keep watching. It's not a separate video. I'm going to show you guys how to make money in this very volatile, unpredictable market. Because, no stock is really doing very well. And if they do, it's only for, a day or two, and then they go back down. So I'm going to show you exactly what you can do and what you should do. Here we go. Okay, this is SQQQ, or what I call SQQQ. It's just easier to say and easier to remember. Okay, straying away from the topic a little bit. Look at this lady. It says not everything should be 5x the national average, and she's like drinking this huge cup of coffee. Anyways, I just thought that was funny. So let's get back to it. Ultra Pro short QQQ ETF. It's what they call an inverse ETF. And we're going to talk about what it does. Inverse leverage strategy for SQQQ means it attempts to reproduce a daily investment result as it is roughly the opposite the daily performance of its underlying index, and then multiple those results by a certain factor. The stated objective of SQQQ is to triple the opposite results of the NASDAQ 100. This means investors in SQQQ are preparing for the greater non-financial stock market to struggle. Since the NASDAQ 100 tends to be heavily weighted toward technology, telecommunications, and healthcare stocks, the SQQQ should tend to perform well when these sectors perform poorly. So like I said, it's the opposite of the NASDAQ market. When NASDAQ is doing bad, SQQQ is going to do well. So that's when you want to buy it, is when the market is down. You will make money on your SQQQ stock, the leverage ETF. All inversely leveraged funds are made up of financial derivatives and sometimes even derivatives of derivatives. To achieve the opposite of a specific asset, the fund managers have to trade in short positions and swaps, which essentially are bets the underlying security or investment performs poorly. The fund provider for SQQQ ProShares was launched in 2006 and focuses on specific, targeted, and relatively risky satellite holdings. Most of its ETFs are moderately small or very small, and SQQQ is no exception. Total assets under management, or AUM. Suitability and recommendations. It is paramount that investors understand SQQQ is a daily targeted inverse ETF. ProShares designed this for short-term, high-risk, high-reward gains in the event the NASDAQ 100 struggles. This fund is not suitable for long-term hold. Investors who buy and hold SQQQ find the returns badly damaged by expenses and decay. Several key factors prevent SQQQ from serving as an acceptable core holding in an investor's portfolio. The first is the short-term focus of the fund. It is not a buy and hold ETF. I repeat, it's not buy and hold. Another area of concern is the fund size. Tiny ETFs such as SQQQ can go through wild fluctuations, and they're always close to closing altogether. So, anything I say is not a suggestion to buy, sell, or hold any stock or cryptocurrency. I'm only sharing with you guys what I do to make money when the stock market is doing well and when it's also doing poorly as far as the NASDAQ sector. So I'm going to wrap up this video. Make sure you guys like, comment, subscribe. If I earned your like, make sure you hit the like button for me, and I will see you in the next video.